Hey, what is going on, guys? Welcome to another video. And today I just wanted to go over Alibaba's recent earnings that they just dropped yesterday. As most of you guys know, I've made several videos on this company. Alibaba is one of my favorite companies. I am extremely bullish on this for the future, especially at this prices. And as many of you guys know, some of my personal favorite investors and also the greatest investors in the world are invested in this company. As you know, Charlie Munger, Warren Buffett's right-hand man, he has just been continuing to buy the dip every single quarter. And some of you guys may not know this, but Greg Alexander, who is one of Warren Buffett's favorite investors of all time and is definitely a great investor, also has a pretty solid position in Alibaba. So you've got two of the biggest investors in the world and both associated with Warren Buffett heavily in this company. And I also love this company as well, especially at this current valuation, which I agree with their thesis, which they basically think that at its current valuation, it's cheaper than most American companies. So it's a buy. You know how they do it. Those two guys, they don't buy stocks due to macroeconomics or things like that. They just find stocks that they think are cheap and are going to grow tremendously over the long term, and they buy them. And I see the same thing with Alibaba. So let's just go ahead and go over the earnings. It was definitely a mixed earnings report, but it wasn't the worst thing in the world. So let's go ahead and go over it. Revenue. Alibaba had a revenue of $38 billion. And don't let this confuse you. I know it says million, but it's actually 38,000 times 1 million. So when you do the math there, that turns into $38 billion. So they had a revenue of $38 billion, which is an increase of about 10% year over year. This was primarily driven by the revenue growth of China Commerce segment, which is 7% year over year, and that makes up $27 million. And just so you guys know, their China Commerce segment, that's their biggest form of revenue right there. So that's definitely a number to keep in mind. Cloud segment grew by 20% year over year. You can see here to about $3 billion. As I said, 3,000 times 1 million, you get $3 billion. Local customer services segment grew by 27% year over year to $1 billion. International commerce segment grew 18% year over year to $2 billion. You can see that right here. And even though it looks good right here, in terms of their year over year growth, except for the 7%, the 7% is not that good. Everybody kind of knows that. But the revenue overall looks okay. The problem is it just didn't really beat analyst expectations. And so when we look at annual active customers right here, it says here of the Alibaba ecosystem across the world reached approximately 1.28 billion for the 12 months ended December 31st. That's really not that bad. An increase of approximately 43 million. I'm sorry about that. It says here this includes 979 million customers in China and 301 million consumers overseas. Income from operations. There's so much we can go through, but this is where it starts to get a little bad. So you can see here, income from operations went to about 1 billion, and this is a decrease of 86% year over year. And one thing I did see in the earnings reports is you saw a lot of this word right here. You saw this word a lot right here. I mean, if I just go ahead and do my good old finder, you can see that the word decrease is mentioned here a lot, and that's not good. So starting right here, you can see the word decrease. You go further down, here's decrease again. See right here, a decrease of 34% year over year. And that's the impairment of goodwill thing. For some of you guys who don't know, here it is. Sorry, I had to pull up my notes. It says here the company also took a 3.9 billion goodwill impairment charge in its digital media and entertainment segment, a likely response to government orders to divest some of its media assets. Adjusting for that charge, operating income fell by 34% to 5.1 billion. Management said that this decline was due to investments and growth initiatives. And for those who don't know, a goodwill impairment basically occurs when a company pays more than book value for a set of assets. And so, like I said, the earnings report was mixed. When you come down here to net income, like I said, you're starting to see that decrease again. It's showing year over year decreases of 74% and 75% respectively, things like that. One thing I did want to go over though is that share repurchase program, because that's something that I really like. Repurchase. That share repurchase program is definitely something that is very good for investors. Here it is. So let's go ahead and go over that. So it says here, during its December quarter, Alibaba repurchased approximately 10.1 million of its American depository receipts for 1.4 billion. The company added 43 million active customer. Oh, I'm sorry, I already read that part. So we go right here at the end. It says here, our current share repurchase program will expire by the end of 2022. So that's not bad either. Cash flow and operating activities. This is pretty important. Our cash flow is pretty important, but it did decrease. Yeah, you can see that right here. It says here, decrease of about 12 billion. Well, 12 billion is how much they got in cash, and that represents a decrease of 22%. And so overall, I just want to go over the earnings report so you guys can kind of see how mixed it is. There was a mixture of increases. There was a mixture of decreases. You could also kind of see in the report, in my opinion, that the China stuff, the whole China regulations and things like that, definitely affected the company. You know, I think that the government actions that you saw in 2021 have fundamentally changed the company as well. And I think that it has restrained its growth a little bit and cut Alibaba's profits. And that is some reason for concern. However, I really don't see that being a long-term issue. I really don't. You know, I think that that'll be an issue maybe for this quarter, next quarter, maybe even the next quarter. But I'm kind of in the same boat as Charlie Munger and Greg Alexander. I'm kind of looking years and years ahead down the line, because obviously you've got the current tensions in the geopolitical space right now with China and Taiwan and Russia and Ukraine and things like that. But I'm still really bullish on this company. And what's making me take the gamble on this company, like for all we know, this company could go to $70. I mean, you just don't know. But what's really making me take the gamble is, in my opinion, this company is just so cheap. It's just so cheap given what they do and how much cash they have on their hands. I mean, look here. If we look here, they've got almost $300 billion in cash right here under cash and cash equivalents. I mean, this company's got some serious money. Like, I'm really bullish on this company. You know, the growth is slowing down and they've definitely got some competition, but I mean, I still really like them for the long term. So I'm definitely still an investor in this company. And the other last thing I wanted to say too is, if you notice, the stock price didn't really change that much. You know, you didn't see this ridiculously 20% sell off like you saw with stocks like Netflix and Facebook and things like that. And honestly, I think investors expected this. I really do. I think investors didn't expect the December quarter to be that great. And so investors pretty much got what they expected. That's what I think. I think that investors kind of knew that the December quarter was going to be weak. And so the stock price didn't really move that much. And I think that that is a good sign that we may be at a little bit of a bottom with the stock. And so, you know, this $110, $106 range, I'm very comfortable buying this stock here. I really am. And so those are my thoughts on Alibaba. I am extremely bullish on this company. This is a very long-term position for me. I plan to hold for the next 3 to 5 to 10 years. I really like this company. And those are my thoughts on Alibaba. So there you go. That'll go ahead and conclude today's video. Thank you guys so much for watching. Feel free to like, share, subscribe, and I will see you guys in the next one.